Hi everyone, welcome back to the channel X and Yong. It is hard to make rational decisions when the market is like a roller coaster ride. This video is not advising you to go for a deep buying strategy or asking you to dump all your holdings right now. Indeed, it is always important to get a hang on the company's performance, which is based on facts and figures rather than just the feeling of fear or greed. We will be looking at Tesla, one of the most traded stocks in the market. The ticker is TSLA. I am using MooMoo as a platform for quick overview and analysis. Do give us a like and subscribe to the channel for the YouTube algorithm, or comment below if Tesla is your favorite stock. Previously, I have listed the 3 questions to ask ourselves before buying the stock. First, is the company business model sustainable? Second, is the company financially healthy? And third, is the company over or undervalued? Let's start from the company overview of Tesla. Listed since 2010, the market price is around $709. The issue price was just $17 back in 2010. When we talk about Tesla, we always relate it to the electric vehicle. Yes, of course, it is really well known for the electric cars. If we look into the company profile, Tesla is operating in 2 segments. First is the automotive segment, including selling of EV, the Model S, Model 3, Model X, and Model Y, retail merchandises, and vehicle insurance. Second segment is the energy generation and storage. This is related to the solar energy products and related services to the commercial, residential, and industrial customer. Which segment is the main contributor to the revenue stream in Tesla? Not surprisingly, 94% of the revenue is from the automotive segment. Only 5% is coming from the energy generation and storage segment. First question, is the company business model sustainable? Based on the statistics in 2021, Tesla is the main producer of EV, having the largest market share of around 13%, followed by the Volkswagen, BYD, GM, Stellantis, and others. The top 5 producers already accounted half of the market share. An estimated 6.5 million EVs were sold worldwide last year in 2021, a 109% up from the previous year. In 2022 outlook, it is projected EV industry to continue growing with at least 45% increase in sales globally. Second question, is the company financially healthy? Profitability on an annually basis, Tesla diluted EPS has increased year over year at 6-fold to 4.9 in 2021 compared to the previous financial year, just 0.64. On quarterly basis, EPS also has gone up compared to the previous quarter. This is definitely a good news for investors. Tesla has made a huge jump in the net income. Free cash flow, Tesla is having a free cash flow of $2.21 billion, a positive amount compared to the year 2018, when Tesla is actually having negative free cash flow, which is considered of a high credit risk to investor. But right now, the company has an improved cash position. Return on equity, Tesla is having a good ROE at 29% in Q1 2022. Due to the increased net income, for the 5-year average ROE, it is negative 10%. The reason is because Tesla have been making net losses many years, and it started to make its first net profit in 2020, and that's why it has successfully been included in the S&P 500 in 2020. For automotive industry, let's look at the extra financial ratio, debt to equity ratio. DE ratio of Tesla, which is a measure of financial health, is only 22%, which is actually considered very healthy. When I do a quick comparison to the automotive sector average at 0.98, compared to General Motors, which is having a DE ratio of 1.23x. Let's take a look at the gross margin, sales less cost of goods sold. The gross margin in the recent quarter is 27%, up from 20% in the previous quarter. This is not a super good number because we know that Apple is always having close to 40% gross margin. We should always compare this to other competitors. The sector average is around 18%. Volkswagen Group is having a gross margin at 18%, while General Motors gross margin is only 13%, which is below the sector average. These are historical performance, not an indicator of the future performance. Third question, is the company over or undervalued? Let's check at the Analysis tab for the company valuation. The price per earning ratio, PE ratio, the current PE is 96.31, way higher compared to the sector average of 16.62. Why are investors still willing to pay such a high price for Tesla? Because they believe in Tesla potential, and also there are many speculators in the market looking to trade the stock. Compared to its competitor General Motors, the PE ratio is only 6.35, below the sector average. It is really a huge difference. Of course, we need to take into consideration that the current PE ratio is based on the current share price and the earning per share. If Tesla is able to have higher EPS, it will drive down the PE ratio. So yeah, that's all on how we can use MooMoo to do a quick analysis on Tesla. Comment below if you have any question or just help with the YouTube algorithm. Do give us a like and subscribe to our channel. See you again in the next one. Thank you.